Did you know there's 2 ways to get qualified for a mortgage? Now there's several programs, but there's only 2 ways to get approved. In this video, I'll show you the difference and some things to expect when trying to get a mortgage. So the first step to buying a house is figuring out how you're gonna pay for it. If you're a cash buyer, the answer is easy, it's cash. But if you need a mortgage, you'll wanna talk to a lender and get pre-approved. Getting pre-approved is kind of similar to getting a sports physical right before your season starts. You go see a doctor, go get everything checked out, and make sure you're good to go for the next season. Your loan officer should be helping you set a budget while also going over some preliminary numbers so that you can get an idea of how much money you'll need to buy a house and what your payment will be. But how does a lender come up with that figure? How do they come up with what you qualify for? Lenders look at your credit, income, and assets. They take all that information and they run it through what's called an automated underwriting system. Getting an automated approval is the first way you can get approved for a mortgage. More on that later. So when figuring out if you qualify or not, the first step is to make sure you have sufficient credit score for the lender's programs. And it's important to note that not all lenders play by the same rules. So if you get turned down, ask why, and then ask if that's a standard guideline or if it's an underwriting overlay. An overlay is an extra guideline put in place that goes above and beyond industry standard guidelines. For instance, let's say that you have a 580 credit score and you want to use an FHA loan. Some lenders actually have their minimum credit score for FHA set at 620 or 640, even though that's higher than the standard set by HUD for an FHA loan. The second thing your loan officer will look at is, do you have enough income to qualify? This part became really important after the massive amount of reform that came after the Great Recession. One of the biggest contributors to the crash were really sketchy loan products that didn't verify income or assets. So the loan officer or the customer could just make up an amount for the income. Yikes. Sure enough, a lot of folks started to not be able to make their payment because they didn't make enough money to support the payment. Which is why most of the regulation that came after the last crash really focused on what's called ATR, or ability to repay. So after analyzing your credit and income, your lender will make sure that you have enough money to get to closing. Let's say in your situation you need $25,000 to close, but you only have $10,000 in a bank account. The lender will need to know what your plan is. How are you going to bridge that gap between $10,000 that you have and $25,000 that you need for cash to close? Now, if you're short on funds, then you might look into getting a gift or down payment assistance. So next, the lender will run your full profile through an automated underwriting system. Think of an automated underwriting system as a computer or algorithm that determines whether or not you can get approved for a mortgage. It's kind of like the first set of eyes. So let's say your loan runs approved. That means if your documents match what's on the application, you fit the mold. Now, a human underwriter will still have to look at your file to make sure everything is getting documented properly. But getting that automated approval is really the first step. So that's one way to get approved for a mortgage. The other way is what's called a manual underwrite. A manual underwrite is necessary when your situation doesn't warrant an automated approval. So you may fit the mold of certain programs, but the algorithm just doesn't like it for some reason. The most common reason for needing a manual underwrite is some sort of credit issue, or you don't have a credit score. Manual underwrites can be a great tool, but they normally require more paperwork, so just be prepared for that. Also, depending on the lender and the situation, the terms may not be as great. Lastly, with manual underwrites, a lot less lenders can do them. So if you get turned down, ask your lender if they do manual underwrites and if you'd fit that mold. Depending on your situation, it may be a good option. But again, go in with the expectation that you will get flooded with paperwork. And no matter what, for a smooth mortgage transaction, make sure you're being as accurate as possible on your initial application and be very organized when it comes to getting documents your lender's requesting. I hope this helps. If you don't know who I am, my name is Nate. I am a licensed mortgage loan officer. I have been for about 10 years, and I love making content focused around real estate, mortgages, and credit. If you want to learn more about those subjects, consider subscribing. If you have a topic you'd like me to do a video on or have a question, drop it in the comment section.